Good morning and welcome to the Market Forecast. I'm John Hoagland. Thanks for trusting me with your time. Yes, Friday is finally here. March the 19th. I know that you're looking at your markets in context through the lens of risk management. Consistency in what you bring to the market is key to consistency, what you want out of the market. It's going to be an interesting trading day. It is quadruple witching day. Something that I've found is better to spectate rather than participate. That last hour of the trading day today could be very interesting, or it could be just a big nothing. It really doesn't. It really doesn't seem to have much rhyme or reason. But we've got stock index futures, stock index options, stock options, and single stock options, all expiring at the end of the day today, from the March contracts. So it can be a kind of a mess at the end as people try and get out of those positions before expiration. As always, we're going to be just on Fridays, trying to make a little bit of money. We used to say in the trading pits, anybody that was still in the pit on Friday afternoon is probably down money. We don't want to be that. I'm probably going to see if I can make a little bit of money this morning and then watch the fireworks this afternoon, if there are any, according to quadruple witching. It's just kind of sitting down, doing my homework this morning. It looks like stocks are steady to trying to recover after the losses yesterday. It looks like maybe the Dow, maybe even the NASDAQ have a chance at recovering some of the losses and actually closing the week higher. It all depends on what happens. It looks more like a dead cat bounce than anything to me so far. U.S. Chinese talk started yesterday, and as we can probably expect, they've started relatively contentiously. We're probably going to see more of that tone as they move forward. As far as crude prices are concerned, there's another dead cat bounce. That was such a big move. We talked about it as we were opening up and seeing what was going on. In the market forecast yesterday, we had left the opening range at the high of the session, driving below an important inflection level in the weekly kickoff level. Really an event that I believe, and open interest kind of supports the idea that we just got a little bit too long. We had a months long rally. Finally, we saw some profit taking from those who maybe have been long lower, and we probably saw some late to the party longs just bailing out of those losses. So really a big move. Again, the market attempting to recover, more of kind of a dead cat bounce. As far as the VIX, the Dixie, and the 10-year are concerned, looking at them just briefly just a couple of minutes ago, the VIX is down a little bit from its close. Of course, you know that you're going to see an uptick in VIX when the equities have a day like they had yesterday. It's down a little bit this morning at 21.17, still not a very high level of expectation of volatility. The dollar index still hanging in there just under that 92 level at 91.95, and the 10-year off its highs yesterday of up above 1.75. It's down to 1.69%, just as we took a look at this morning. Friday. I'm so glad that it is quadruple witching and we're not going to have to deal with rollover in the equities for another 2.5 months. Crude oil and different products, of course, have different expirations and rollovers. Crude oil, unfortunately, rolls every month, so we get about a week of a little bit of blurry confusion as far as volume and open interest is concerned. But Monday, we're going to have some pretty more clear information in our equities as far as open interest and volume is concerned. It has been discussed in many an equity trading pit that discretionary traders tend to have a hard time that 2 weeks of rollover. And I'm pretty sure that I'm kind of seeing that in some of the people that I've been working with. And so next week, maybe things will go back to normal in markets if there's a normal. I think that markets are rational. It's people that make them irrational, and markets certainly change people as much as people change markets. So looking forward to next week. Going to see if we can get away with some cash today. Yes, it was St. Patrick's Day on Wednesday, so we're still talking about a little making of the cash, a little making of the green, if you will. Make sure you like, share, comment, question, feedback, and heckling at will are welcomed. And make sure you subscribe to our YouTube channel so you can get notifications when we do go live. Love to say good morning to everybody. My guy Ralph, first in the room. You win the prize today, Ralph. Kevin, good to see you. Emma from across the pond, nice to see you. The infamous Felix Escobar, good to see you as always. Just Jason, good to see you. Buenos dias. Emma. Murph, another Friday, another great week in the books, another great weekend ahead. Love the positivity you bring to us, Murph, every day. Let's make it a good day and enjoy our weekend. Absolutely. Good morning, Will, Brian. My brother Rick, good morning. Brooke, maybe a new name there. I'm not sure if I remember seeing that. Welcome to the Market Forecast. If this is your first day or first time commenting, thank you for saying good morning. Dee McGregor, good morning. Clarence, good morning. Taking the day off. Clarence is taking the day off. Not a bad idea. It can be a wild one on Quadruple Witching Day. Michael, good to see you. Laura, Tim, Joseph, John, Sean, Mr. Shine's Mystery Channel, good morning. Palmetto Smoke Pit. That's a good name. I like that. Welcome to the Market Forecast again. If this is your first trip, as well as Lamus G, Trading Research. Shady Trader, good morning. I lost my spot. Chef Magallanes is here. Good morning, Chef, I should say. It's really early, I think, where you are. Sean, Keith, good morning. Danny Ireland, good much. As a musician, do you prefer digitally remastered tracks or the original vinyl cracking through a Sansui receiver and some 500-watt? Dan, I love the analog. I've got a big box of vinyl and a turntable just off screen here. And my brother Rick, who was saying good morning earlier, I believe he still has a nice big Sansui receiver. Sean, good to see you. Charles Caesar. Ola, good to see you. Jason Ashton. Ason, good morning. Let's make some money. Absolutely. Rob T, good to see you. Nick. Phil, Tactic, Adam, Milas, Edward, good to see everyone this morning. It's okay, Edward. I've been called lots of different names. Josh and John are just a couple of them. All right, gonna get everything set up here so we are ready to check out the charts, as always, starting with the daily and crude. Man, I spent all day yesterday a little upset that I wasn't set up for that move to the downside yesterday. And I'm hoping, from what we were talking about in the forecast yesterday, that at the very least you didn't try and fight that move to the downside. That was a really big move, and it was tipped off right from the weekly kickoff level. Lacey is saying good morning to everybody. She prefers when I talk to her, but that's okay. We got a little business to take care of this morning. So, Lacey, be a lady, be quiet. It's okay. We're good. I'll come pet you in a little bit. All right, let's take a look at the charts. Okay. As always, looking at the daily. I see you, Mr. Shine. Good to see you. Oleg, smell of spring in the air. Absolutely. And an 8-track. Yeah, we are of that age. I remember having an 8-track player, and remember how you had to stick a book of matches in there to make it sound right. They were bad as far as wow and flutter were concerned. Okay, on to the charts. May crude, definitely May crude. The April has no volume. You're probably noticing some gaps in the bids and offers if you're still looking at that April crude. We're in the May. So, big drop in open interest yesterday, minus 53,000 in open interest. And guess where most of that open interest was lost? It was in the June and July contract, not even in the May contract or in the April contract. Most of that open interest yesterday was lost in the June and July contract, which tells us, we're looking at some longer term traders that just took some profits off there. Some of our newer longs above here, I'm sure, got taken a bath, and hopefully, when we saw what was going on yesterday morning and we talked about how there was so much space below that this could be a substantial move to the downside. If you didn't get in it, hopefully at the very least you didn't try and fight it. Always a bad idea to try and fight a directional market. Is this going to create a new market state? It is quite possible. This is kind of a break of an upside trend line we're just kind of visualizing here, and it's taken us kind of back into an area of balance. So this previous weekly kickoff level down here, 58.80, is going to be somewhat important for us as days go on. This may be a continuation down below this level. And if we hold above it, I think we're just going to kind of range in this area for a period of time. Good morning, Alexander and Level 2. Good to see you. I just found it interesting in checking the open interest. And of course, this is a preliminary estimation, but a lot of that open interest was lost in months even beyond the May contract. Why? Why did that happen? Well, we've had quite a long upside move. We were holding an important inflection level that just broke yesterday. A lot of traders said, hey, if we can't hold here, we're bailing. And they bailed big time yesterday. Take a look at the 30-minute chart here. Okay, we've opened with a gap, which we've closed immediately. We are basically trading settlement, which means there's absolutely no overnight inventory to look at. Yesterday's opening range was the dead-ass high. We saw this happening in real time in the forecast and talked about, okay, this might be game on to the downside, and boy, it certainly was. I mean, let's see here, 63.80 down to 50. 980. I mean, that's a pretty decent move. $4, pretty big, pretty decent move. Now we're going to probably do a lot of licking of wounds today where we don't have a lot of information. I'll be watching the overnight low, which we just put in the regular trading hour session for a potential opportunity. How about our overnight high? If we've opened outside of range and value, if we go back and reaccept inside value from yesterday, there's quite a bit of repair that can go on in the volume profile from yesterday. So I think we'll be watching early to see if we spend some time back inside value, reaccept value from yesterday, and that might be just enough to have us come up and repair some of the range and some of the holes in the volume profile from yesterday. If we don't accept it, I'll look for more continuation to the downside. Being Friday, I know we all want to make a little bit of money and start our weekend early, but don't let that push you into a trade that you wouldn't be normally taking. Make the market come to you. Whoops, I don't believe I just did that. All right, let's go. Let's move on. The E-mini S&Ps also, for the last couple of days on the forecast and other people that I've been talking to, we've been saying that there's indication that the market is losing momentum to the upside. One way that I look at that is in these whole moving averages, the 9 session and the 13 session. We had a crossover 2 days ago. They started pushing lower on the open yesterday. This is just a nice little tasty pullback. We've been talking for 2 or 3 sessions here prior to yesterday about how momentum to the upside is falling. Let's start thinking about selling this market on strength instead of looking to buy it on weakness. So hopefully that was helpful for you. We've got very little overnight recovery from the move to the downside. And remember, it is quadruple witching. Taking a look now into the 30-minute chart. What have we got? Well, we've got settlement here in 39.06 even. Again, no overnight position. I don't know what's going on with this stab to the downside here, but it seems like there was some sort of a release, which we are pretty sure there was not. So we're going to be basically opening with no overnight inventory, no overnight positioning. We're going to be opening inside range, outside value. Our overnight high is the low of value from yesterday. This is going to be an interesting spot for an execution. I'm going to be watching our overnight high and our overnight low, which just was extended but rejected. Again, we're opening probably outside of value, so if we do accept back inside value, we may get some more recovery to the upside. But until we start seeing higher lows and or higher highs, I'm still looking at this as a market that, at least for the time being, I'm going to be looking for cheap opportunities to sell it on strength. The NASDAQ, same but different. The NASDAQ had 3 attempts to accept above that weekly kickoff high, unable to do so. We finally saw the market kind of get perhaps a little bit too long up here. There's a big difference. I see. Okay, the Fed announced that they wouldn't extend pandemic-style crisis rule, allowing banks to relax capital levels at 8 a.m. All right, thank you very much. And Laura, thank you. Again, I see that a couple of folks commenting on what happened, and I'm going to be checking that out later. And I appreciate you letting us all know that. See? Isn't community great? All right. So we've been basically now kind of kept in range. We're way off our all-time highs. That's why this market is same but different. Rejection of weekly kickoff high 3 days running. We did have a close above it 2 days ago. But the market really just didn't spend any time, didn't have any volume. Again, it's rollover, so the rollover range remains here. And the open interest yesterday, instead of taking off open interest, we added open interest. It appears as though some investors and traders added to short positions, and on a move to the downside and an increase in open interest, that indication can be implied. It is quadruple witching hour, so we're going to be watching. And so unable to hold above, centrally located, in a range. The NASDAQ seems to be more in a short time frame controlled situation here. Looking at the 30-minute chart, okay, same but different. Settlements all the way down here, 12,779.75. Our overnight low, interesting. Overnight high, interesting. Anything in the middle, no overnight inventory, no gap, it looks like. So I'm going to try and stay patient in this. Gold. Testing, weekly kickoff high. We keep bumping up against this. Eventually, we're going to wear out the sellers there. We lost 3,100 in open interest on this move to the upside, but on higher volume. We squeezed out some shorts, perhaps, up at this level, and the more we continue to test this weekly kickoff high, gold has been somewhat off the radar. We've been losing open interest over time. It's been, kind of a tough spot here. inside extended trading hours between yesterday and today. Pretty good recovery off those lows from yesterday. And because we are in short time frame, one time framing higher, the idea is to look to buy this market on weakness. We've got some work to do to get through this kickoff level of 1748 even, but the more we kind of go up there and peck at those sellers that we've found up there, eventually those sellers may capitulate. And when they do, I believe, we're going to probably see a pretty decent upside move. There's a lot of space up here for us to continue if we accept above that kickoff high level. I don't know if that's going to happen today, but it is a distinct possibility. The euro, still kind of off the radar. We lost 3,500 in open interest on this move to the downside. We've got, our kind of rising triangle that we noticed yesterday. I've put the lines on there because it looks like we may be at risk of breaking to the downside here. A lot of this, of course, depends on the dollar, which isn't really moving that much. It's just hanging around that 92 level. We get a pop above that 92, that might be enough for us to show some acceptance below this line here. Range-bound short time frame control, I believe, is continuing. Less energy in that open interest of losing 3,500. Less energy in this when we start losing open interest that way. But again, potential breakout of the rising triangle. Not really that fascinated with that at this moment. We do appear to have opened. Yes, we do have a gap to the downside. If we're unable to close that gap, that tells me, well, then we may be in for more downside here. We've got our weekly low at our current regular trading hour session low. This is kind of interesting. Again, if we can't close the gap, we're going to try and sell strength up against our regular trading hour highs here. Or if we break out below the weekly low, that might be also an opportunity for us. If we can't take out this weekly low, then that may be a move in the opposite direction that would give us an opportunity. But again, it's not really high on the list of probabilities for today is this euro. The 10-year rates have pulled off the highs. Yesterday we saw a pretty decent uptick in the 10-year open interest yesterday, adding 149,000 contracts. So we did see some investors and traders barreling into the short side in this move to the downside. Pretty decent volume as well. It's encouraging for continuation to the downside, which would mean rates would have to move higher. So we're really going to be kind of a fight, I think, for us today. Again, so far inside extended trading hour range. I think the bet is still rates are going to continue to creep higher, which would in turn push price lower. We were at risk. I put this circle around here because before we opened, when I was doing my research, there was a chance that we might create an island low, which would tell us that rates might be heading back lower. We've taken out that possibility now. We've closed the gap between here and yesterday. Today, there's no more gap. Give us an opportunity to look at the weekly low here as an opportunity, and if we hold there, I'm looking for really this market to kind of range and perhaps repair some of the gap that we've put in between the yesterday and the previous day. So watching the current regular trading hour session low, that's a pretty decent move to the downside to close the gap between these 2 days and to close our opening gap back down to this level. Right. Just seeing if I have any more notes here that. Okay. All right. I think we're in pretty good shape, and I've yammered enough. I got about 4 minutes here, it looks like, to the equity open. And I apologize. Yesterday morning, I was talking about the market recap. We were unable to do that yesterday, and we do apologize. There won't be a recap today because it is Friday, and we don't do recaps on Friday. So I'm going to take my deep breath. Be humble, grateful, and creative. Watch the show later on. It's going to look like there's great opportunity, but there's also going to be great risk. If you've had a good week and a good day today, no reason to push things. And have a great weekend, man. Get some rest. Be good to each other. Be good to yourselves. Wash your hands. And we're looking forward to seeing you back here on a normal trading week next week, if there is such a thing. So, again, have a great trading day. Get out there, make some money. Take the day off. Take it off early, if you will, and get the chance to watch and see what happens on Quadruple Witching this afternoon. It might be interesting to watch. Get out there and profit. Trade well today. I'll see you next week.